Hello François.
Hello Alessandra.
How are you doing? Ça va, ça va.
Sorry, we moved to English. Sorry for that.
Yes, we'll do so. I see that a lot of people are already online. Please don't hesitate. We would like it to be as interactive as possible. Press activate your microphone, your camera, and press the live button next to your name in the participants list.
Okay, just a quick question. Is it possible to have a copy of the handout? Because usually when I have the handout, I pick my notes on the handouts, which is more practical.
Yeah, we will put it for the members on the members page, but I'll explain all of this when more people will be connected.
Okay, that's good.
If everyone can just put your live and maybe we'll start at I would say 37. We will try to start at 37 sharp, but the two speakers who were just here have a fire alarm apparently.
I'm really sorry, guys, but we have to evacuate our building. We have a fire drill right now. I'm really sorry.
Let's see if it's a false alarm.
I will keep you posted. Real sorry, Alessandra.
No worries.
Sorry.
We'll start introducing each other. So yeah, the problem of life. So if I can see that many people are there already, maybe François, you can start by introducing yourself.
Yes, François de Witte, currently working as consultant. Besides that, also active in fintech as a mentor for some fintechs, including, for instance, Scudi, and I'm also observer in the board of Digital.
Yes, I see Jeremy. You've put your camera on. You're live, so you're the person who has started the idea of organizing this webinar. So thank you so much for that.
Pleasure.
So yeah, if you can introduce yourself quickly.
Just a second. Can you hear me?
If you want to see more people, there is a little button at the bottom of your screen on the left-hand side. You have gallery view. You can see everyone.
Okay. You want me to introduce myself?
Yes, very quickly.
Well, I'm CEO of an electronic monetary institution with the application in process. It's called MGF, but I'm also starting on a new concept in banking compliance, which will reduce the number of false positives and SARs and everything very significantly.
Wow.
So watch this space.
Yeah, we'll keep an eye on that. Peter.
Yeah. Hi, everybody. My name is Peter. I am managing director of Okioki, which is one of the PSD3 licensed, AIS2 licensed companies in Belgium. I'm also board member at FinTech.
Arnaud, you can go on. I have one of the speakers calling me to tell me about they have a fire alarm, so they'll be back soon. But I'll just cut my microphone for a second.
Okay, so hello everyone. So Arnaud Sirten from Pulse Consult, acting as a consultant in the payment industry for more than 20 years. I have some background in the payment terminal, transaction processing, and as well open banking, open finance, and I'm involved as well in the organization of the PSD barometer that were executed over the last 3 years within FinTech Belgium.
So false alarm for them, so they're coming back very soon. I see Jean-Gabriel actually hiding behind. Yeah, coucou. Maybe quickly, we can't hear you. You can maybe unmute yourself and introduce yourself. And all the other people who have joined, don't hesitate to press the live button, camera on and microphone on, at least for this first stage. It would be nice to have presentations and people introducing themselves whilst we wait for the speakers to come back.
So, hello, I'm Jean-Gabriel from Extend, the best open banking platform solution worldwide.
Very objective, huh?
I'm going to ask very objective, and Cédric, I see that you're there too. Maybe you can vouch for them.
Yeah, indeed, the very best, no doubt.
Can you introduce Digitil?
Yeah, so I'm here with Salem, Philippe, and myself. Digitil is a fintech company. We're a licensed payment institution providing payment services, invoicing services, and access to account information services to mostly integrators as a SaaS. So that's us.
Nice. Thank you. Marc Müller, I see.
Yes, good afternoon, everybody. I'm Marc Müller. I'm domain lead payments at Isabel Group. Also responsible for their open banking as a product marketing manager. So we're looking forward to having a discussion about PSD3.
Nice, thank you. And welcome. Johannes van Herk.
Yes, good afternoon. Johannes van Erk from the compliance team of Unified Post Payments. I also have normally two colleagues on the line, so we're happy to learn something about the PSD3 and the PSR.
Nice. Nice to meet you. Sasha, I see. You need to unmute yourself. We can't hear you. Apparently there's a problem with your headphone. Maybe I can ask Lilia Locatelli to introduce yourself.
Yes, hello. So I'm compliance manager at Money Trends. That is money transfer company, but also we provide payment accounts. And yeah, I'm responsible for compliance in Belgium.
Nice to meet you. I see here Philippe and Joan are back. Good that it was a false alarm. I know
Yes.
that now you are completely out of breath with those. So
Exactly.
Vincent Duchateau to introduce himself, maybe. If you can see us. We can't see you anymore. Vincent, can you hear us? Nope. Sasha, I don't know if you've sorted out your headphones.
I think so. Can you hear me now?
Yes, we can.
Okay, good. Nice to meet you all. So my name is Sasha. I'm working as a manager within EY. So working in regulatory compliance and specifically in payments.
Nice to meet you. So we're going to start the webinar because we only have 1 hour. For all the others, don't hesitate. You have a chat on the right-hand side. So yeah, like Victor Smith has done, so it's nice. Don't hesitate to introduce yourself there. Make connections. You have Bizabo app on your mobile, and you can also connect on the website. You can network amongst yourself. So today's webinar is going to be introduced by Joan, Carette, managing partner, and Philippe Prez, partner at Simont Braun. Now I can ask you to all turn your mute yourself. And then you will reactivate if you, thank you, Alex. If you have a question, it will be an interactive session. We will try to make it as interactive as possible. Nevertheless, there is a lot to be said, so I'm not going to be very long. So that you know, we're going to have 2 parts in the presentation. We've cut it into 2 so that you can ask your questions, some questions on the first part in the middle, and trying to be as interactive as possible. And then the second part, you will have also a Q&A session at the end. Questions, you can put them also in the room chat. We have access to that, and we will try to answer these questions. We will try to stay for just 1 hour, finish on time. If you want to stay, the room is yours. If you want to chat and a little bit further, the speakers. Philippe, I know that you have a tiny bit of more time. It's not a hard stop at 1:30. So if you want to stay as well, you can always do. And for the members, If you have more questions for the experts, just so that you know, they are mentors of FinTech Belgium, they are partners of FinTech Belgium, and you can have a 1 hour free advice session with them as well out of this webinar. And we will also, this session is being recorded, so don't ask silly questions. So it will be recorded and it will be put online, but only on the members section. So only the members of FinTech Belgium will have access to it. Without further ado, Joan, Philippe, the floor is yours.
Okay, thank you, Alessandra, and welcome everyone. So it's a pleasure for Joan and myself to introduce the draft PSD3 and PSR texts. As Alessandra said, so we're going to do this in two parts. So the first part will really be, I would say, a bit of situation where we are today. What are the objectives of the text? What is the regulatory framework? What are the services in scope, the exemptions, and what can existing PIs expect? There will be a short room for questions, and then later on in the second part, we'll dive into more the key changes as we have identified them in the draft proposals so far. So let me bring up the slides. I should also add that the fire alarm has restarted on our end, but we'll stay here and we'll see how that how that goes. I'm going to take over control of the slides. Great. So a small timeline to start, showing a bit the situation where we come from. So the second e-money directive in 2009, the second PSD in 2015. So last text been implemented in Belgium in 2018. That's the past. More recently, we have seen the evaluation start of these texts in 2020 by the Commission, and more recently last summer by the EBA with a deep dive review of the PSD2. This has resulted in where we are today, basically where we are since June 2023. So with the draft PSD3 and PSR, the exact reason why we're here today. This is only the beginning of a journey, and that is, I think, the first key takeaway. We are basically nowhere in the process, but the steps that are to come are very interesting, starting with, I would say, this fall up to next summer, where these texts, these proposals by the Commission will be discussed on the level of the member states. And so basically that means that all member states, and for Belgium it will be the National Bank of Belgium that will take that on, will discuss, these texts and come to an agreement. So the National Bank itself has explicitly requested for feedback from the industry. So we know that certain industry organizations are working on their input, also some individual institutions. And so this as of now, I would say until early next year is really the moment for you to be heard. Interesting to note also is that Belgium takes the presidency of the EU Council next year, so from January to June. So the National Bank of Belgium, to be precise, will also preside these discussions among member states, which makes Belgium really, I would say, at the heart of the discussion. It doesn't necessarily mean that the NBB will be able to put more easily forward their position because they preside and so they have to find compromises, but it's interesting to know that, they will be at the center of all of this. Now, if all goes well, next summer we will have an agreement on the level of the member states, and then afterwards this is taken to the EU Parliament, so where trilogue discussions will have place between the member states through the Council, the Parliament and the Commission, for then hopefully to come to a vote at the end of next year, presumably the beginning of 2025. These are best case scenarios on the slide, for a vote in the Parliament and then a publication in the publication journal. And it's only as of that moment that the 18 months of transposition period starts. So there is 18 months to transpose PSD3 into Belgian law, and also 18 months after PSR will enter into force. And that would be the end of, I would say, the level 1 papers, but then beyond 2026, the EBA has received a lot of mandates to issue guidance and regulatory technical standards, and those we will see as of 26, 27, 28. So all of that just to highlight that we are basically not very far in the process, but if you want to have an impact as an institution, now is the time to reach out to the regulator. The next slide, and I can be short about this, are the objectives basically, and it's good to have them in mind whenever we look at the text of the proposal. So in the beginning, I said there was an evaluation taking place, and as of 2020 to 2022. And so the conclusions of that evaluation was basically that despite the great achievements of PSD2, and there are certainly, I think we can all agree, great achievements, the new services, the concept of open banking, strong customer authentication, that despite all of these achievements, there were still quite some flaws as well. Think about a lot of fraud going on when it comes to payment transactions, the unlevel playing field that still exists between non-bank and bank PSPs, the imperfections, as the Commission calls them, of open banking, and the inconsistencies between the supervisors. So the fact that whenever you go see a supervisor in Belgium or in another country, you may have, divergent opinions. And so out of these problems, these challenges, if I may say, come 4 clear objectives around strengthening user protection and confidence in payments, and that is done by giving better, more rights and more information to the users, giving them access to cash more easily and combating fraud. There is a focus on improving the competitiveness of the open banking services and the enforcement and implementation in the member states. That is on the level of the supervisors. And something you surely heard about is also the improved access to payment accounts and the new access to payment systems. And we're going to touch upon all of these aspects in a bit more detail further down the presentation. As to the regulatory framework structure of these new texts, so on the top of the slide, you see what we have today. So we have 2 distinct directives, one per service, one for the payment services, one for the e-money services, that are transposed into national law. And in Belgium, we have actually anticipated what is happening right now on a European level. So basically, we already merged in our national transposition the payment and the e-money services, and we also split them out in 2 separate acts over the prudential regime, on the one hand, which is in the law of 11 March 2018, and the conduct of business rules that we find today in our Code of Economic Law. And this Belgian split, if we can call it that way, is actually something that we now see on a European level as well. So the 2 texts that we have, the PSD3 and the PSR, they combine on the service level payment services and e-money, but they are split out. And on the one hand, the authorization process, the prudential regime, so a bit the equivalent of our law of 2018, if you want, which really focuses on having an access to the activity and maintaining that access to the activity. And this is a directive, and so means that it has to be transposed into national law first before it can become, it can have direct force. And then on the other hand, and that is I would say, the major part of the provisions, we find them in the PSR, so in the payment service regulation. And a regulation, as a reminder, is something that has direct force into national law. So meaning that it doesn't need to be transposed first compared to a directive. However, they will normally enter into force at the same time. So countries have 18 months to transpose PSD3. We'll see how that goes in Belgium. Then at the same time, on the transposition deadline day, so 18 months after the publication, also the PSR will enter into force. A small word on the services. So there, definitely no revolution. I would say more of a reshuffling and a rationalization of the existing services. A few services will merge. On the left-hand side in green, you have the situation today under the PSD2 and the second e-money directive. And on the right-hand side, you have the future situation. So the existing services 1 and 2, so involving cash to be placed and withdrawn from a payment account, they will merge into one single new service 1. Same goes for service 3 and 4, so execution of payment transactions, both where funds are covered by a credit line and where they are not, are merged into a new second service, combining both. And then the other way around, there is a split in existing service 5. So we're basically, today you have both issuing of payment instruments and acquiring of payment transactions, which is one service. And I think quite logically, this has been split out in two separate services because a lot of issuers are not acquirers and the other way around. For money remittance, payment initiation, account information, and e-money, things remain more or less the same. So definitely not a revolution, but maybe one thing that is interesting to keep in mind also for institutions that are authorized already today is to see how, under the reauthorization process, and Joan will touch upon that in a bit, how things will be perceived by the National Bank of Belgium. Because if today you are a number 3, for example, will it mean that in the future, when you become a number 2, automatically you can also offer payment transactions covered by a credit line, for example? I mean, the texts, they are not explicit about it, and so we don't know where this will go. We'll have to wait for, I think, the final text and also see how it will be transposed, and potentially they might work with sub-services. We don't know. So Joan, I hand over to you.
Yes, thanks. So Philippe touched upon how it works, how it's structured, the timeline, and now we are actually in the scope of the new text. We've seen that at least in terms of services, there's no real change, just reshuffling. So in principle, no unregulated actors now should become regulated under the new text. It's kind of the same also regarding the exemption and exclusion. So as you know, under PSD2, some payment services and some e-money issuance and distribution that should be regulated can benefit from exemptions or exclusion, and so not subject to licensing requirement and not subject to the conduct of business rules. Those exception and exclusion or exemption, depending on the countries and so on, and the text, but it's always the same principle, they generally remain unchanged. So there's no exception that disappears. There will probably be an impact for some of those because they are narrowed. It's the case for the commercial agent exclusion, which is has been or is used by many actors on the sector to provide unregulated services. Here, for the moment, let's just remember that the draft tries again to narrow the exclusion as much as possible to really capture real commercial agents as they are defined under civil law, EU civil law. So, but as we've seen with Philippe, the text might change 3 times or 4 times. So just keep that in mind, but we'll see in the last version what it will entail exactly. For the limited network exclusion, no real change, some precision, but that are actually coming from EBA guidelines and so on. But we have still 2 changes or 2 new modifications. The first one is that as from the entry into force of this new text, the retailers will normally be allowed to provide access to cash, so cash withdrawal from an account for an amount up to 50 euro to not be subject to a license, even if we do not purchase anything with them. So that's to enable access to cash. That it's a way to actually multiply the places where small amounts of cash can be withdrawn. And the second novelty is that ATM deployers, which are currently not subject to any requirements, will actually continue being exempted from most of the requirements, but they will, in principle, be subject to a registration regime, which is lighter, and also some transparency rules. So that's for the scope of the obligation where we will be in terms of exception and exclusion. And still, again, in terms of big principles and scope, the question of the EMIs, because when you look at the text now, actually, e-money institutions, if the texts are adopted as they are, e-money institution will simply disappear. But again, it doesn't mean that e-money institution will really disappear. It's probably the idea of those texts is to harmonize the status between the 2 PI and EMI. Why? Because if you look at how they function, the requirements that are imposed to them and so on, Already now, it's for 95% similar. The only difference can go around own fund calculation of own funds and initial capital, and also the fact that EMIs are allowed to distribute e-money and issue e-money. So now the idea will be to make the status of e-money institution disappear, but actually the activity of issuing and distributing e-money will become an activity allowed to payment institution, provided that they will comply with the additional requirements to do so. So again, certainly not a revolution, and even it's an evolution, that's for sure, but with very, very little impact on the EMIs. And finally, what will happen with the existing PIs and EMIs? And what is currently provided in the text is that the existing PIs and EMIs will be subject to an obligation to ask for reauthorization. That's not something new. It's something that we've known when we had the transition from PSD1 to PSD2. So existing PIs at that time remember the process. But still, in this case, the text for the moment with the question of what kind of reauthorization file the PI and EMI will have to provide to the national competent authority, so the NBB here, because the text for the moment make it mandatory for PI and EMI to provide evidence of their compliance with Title II of the PSD3, and Title II is the entire title applicable to PIs, and PIs offering also e-money. So we don't know what documents the national competent authority will be able to require, but for the moment, based on the text, they might be able to require an entire reapplication file, which will be a nightmare for everyone, probably also them, so let's cross fingers it won't happen. But if they do so, then we also have a risk for existing PIs and EMIs that while asking for reauthorization, actually they might be blocked. So this is for us a point of attention, and in the lobbying that is done for the moment by PIs and EMIs, it would be worth asking the question, understanding exactly how this will be decided and imposed, and asking to regulators to be reasonable for that. And so PI and EMIs will have to do so within 24 months after the entry into force of the new text. And they should receive their reauthorization within 6 months, because after that additional 6 months period, so after 30 months, their existing authorization will lapse. So that's for the general principle and scope of the new text. That will close our first part. So please shoot any question you have on that first part, because we can imagine you have questions on other aspects of the draft, but we should normally tackle them afterwards.
So yeah, has anyone a question?
Yeah, I do. Coming from the EMI world, if it's going to change to more like a PI, will the requirements be much heavier for an EMI?
Philippe, I don't know if you want to answer, but at least based on the text as they are now, no. The requirements will be the same, but the additional requirements will be the same as for PI, and they are quite light. Philippe will touch upon that, but it's really when asking for registration for the license, for instance, also providing a winding down plan, that kind of things, but nothing major.
And also the other way around, could it become easier, because a big problem for EMIs is getting the safeguarding account and things like that, which is easier for PIs?
There are provisions in the text regarding access to accounts, so that should tackle that specific concern. But on the other hand, for the license requirement, they won't become lighter, so they remain kind of the same.
Okay, thanks.
I see here François de Witt has also raised his hand. François, are you still there? I don't think so. Maybe a problem of connection. I see Cédric is also asking a question. Do you want to come live to ask it and interact?
You hear me? Yeah. Okay. So yeah, my question was just about TPP, because today there's already a lighter regime for TPPs for the application. So will this still be maintained? Because you talked about the EMIs and API, but not the TPPs.
Oh, we don't hear.
Sorry. Yes, Cedric. So that will remain indeed as it is. So there will be a registration.
Philippe, can you maybe repeat the question, because it was not super clear to everyone?
Sure. So Cedric raised the question, basically whether the existing difference that exists, for example, for account information service providers to have a lighter regime, like a registration process rather than an actual license application they have to go through, whether this will remain the same under PSD3. It appears from the text today, but again, as we all said, this can evolve, but it's clearly the intention of the Commission to maintain the status quo for the difference between those two types of, well, there's not totally different type of entities, but the registration versus the authorization remains in place.
Okay, I saw again my mic. What we need to do, at least as for FinTech Belgium and also in Pay Belgium, is at least to make some lobby towards the local authorities to make this reauthorization process as not too heavy things, because we know already that the National Bank is understaffed here, and we know also some other national competent authorities. So we need to try to have something which remains workable, because 2 years and a half, when we know that an application is 1 year, and that the National Bank of Belgium registers 5 to 6 applications a year, we might have a capacity problem.
Yeah, certainly, but if you look at what happened when we had EBA guidelines on the limited network exclusion or exception in Belgium, the NBB was very pragmatic, because normally all entities that had submitted LNE notification should have refiled a huge assessment and so on. And the LME actually said, okay, guys, let's do it very practically, the ones that already did. So we are not worried about that, but the only concern would be that the national competent authorities would take that as an opportunity to clean, if they want to call it like that, the landscape of existing PIs and EMIs.
Okay.
I see that someone else had asked a question. Frederic Menens, if you want to come live to ask your question. Otherwise, it's in the room chat.
Yeah, I can take it like this, if you want, Alessandro. So it's around the timing of the discussion of the proposal. So as we mentioned in the beginning, but it was a lot of information. So it's not yet on the agenda of the European Parliament. We are still entering now in the first phase, which are discussions on a member state level, so through the EU Council. And that's where it's interesting for the industry, let's put it that way, because here is where you can have an influence actually on the National Bank of Belgium. And then once there is an agreement between member states on an EU level, EU Council level, they will take it to the Parliament. That will not be before, I would say, end of 24, beginning of 25. And it's only when the Parliament agrees that we have a final text.
Thank you, Philippe. Anyone else has a question, whether raised personally or in the chat? You can raise your hand if you need to. We are well in advance, so maybe we can go back to the presentation, and don't hesitate to raise your hand if you have any further question. I'm going to put the presentation back on.
Thank you, Alessandra. So I'm going to move to the next slide. So in this part, we will try and highlight some. We obviously can't highlight them all, but we want to focus on some of the what we feel key. Well, it says changes, but not all of them are changes. Let's call it maybe key features. First of all, under the PSD3, so the directive, as we said in the beginning, the directive is the smallest of the two texts and really concentrates on the authorization process, the prudential regime, so getting access and keeping access to the activity. So first important takeaway is the fact that the authorization remains at a national level. So you won't be dealing with the European Bank. It is still the National Bank of Belgium that will be your key contact for authorizations and supervision. It's also the reason potentially why they've opted for a directive on this level that needs to be transposed into national law, because the authorization process remains very much national. Now, that is one thing. There is a status quo when it comes to the competent level, but the idea of the text is really to evolve towards a more stringent framework, because when the texts were assessed, the conclusion was that there was a lot of difference between the expectations that regulators had across different member states for candidates, but also in the oversight. So the focus of the text is really on standardizing as much as possible the rules, on avoiding arbitrage and forum shopping, which is addressed quite specifically in the whereas sections. Now, how this will be obtained in practice remains unclear, because there are a lot of, I would say, principles and promises in the text, and it will have to wait, I'm afraid, for the level 2 guidelines that need to be issued by the EBA to see how they will put in practice, this promise of further harmonization. I mean, what is present today in the level 1 draft is not a lot. There are a few clarifications. For example, the fact, and that was already present in PSD2, that whenever a PI or a candidate PI requests authorization in a member state, they should at least provide, and that was the text of PSD2, part of their services in that member state. Now, a few, or maybe even a lot, regulators interpreted a part of the services as the majority of the services. And so sometimes applicants were refused access to the authorization process because in their business plan, it appeared that, not the majority of their business would come from the member state in which they applied. Now, the Commission has set this straight and said, whenever we mean part, we really mean part. And so it doesn't mean the majority of the services. So that is an important clarification. And also new, it was already requested by regulators, but now it's also on paper. Whenever you apply for a license, and it's not, and you have applied elsewhere, so presumably unsuccessful, you will have to provide an overview of jurisdictions where you already submitted an authorization before. So that's something which is noticeable. The only new, at this point, I would say, requirement in the whole authorization process is the introduction of a so-called winding up plan, where basically applicants are expected to anticipate a bit their own failure by setting out a plan where they anticipate the retreat from the market, taking into account the best interests of not only their users, their customers, but also potential outsourced service providers, distributors and agents that they work with. So in light of what we discussed during the Q&A, if all institutions have to go through a whole full reauthorization process, it would be, from a practical perspective, weird, since the only new, or one of the only new requirements is basically this winding up plan, which is very different from when we had the transition from PSD1 to PSD2, where there were a lot more new requirements that entered into the framework. And then finally, and quite logically, there is also throughout the text a better alignment between DORA and GDPR. So DORA for security control and mitigation measures, and GDPR for information sharing, and the text of the PSD3. This was not the case for the PSD2, but which is quite logic, because the original text of PSD2 dated from before these two acts. Some other highlights, I would say, of the PSD3 are the capital requirements. So nothing new there, just basically an indexation. So due to inflation, so where money remitters were required to have a minimum capital of 20,000 under PSD2, they will now move to 25,000. The others that had 125,000 obligation, they go to 150, and e-money institutions, they move up from 350 to 400. Now, more important, and also overall more important for the capital that an institution needs, are the own fund requirements. And there, it's also mainly a status quo. So we still have the same calculation methods for own fund requirements, but with now method B, and as a reminder, method B is the percentage of different slices of the payment volume that you need to have as own fund requirements, is set to be the default method. Now, for Belgian institutions, this doesn't change a lot because for the NBB, this method was already the standard. Now it's also the standard or the default method in European text, and the only scenario where regulators could allow for a different calculation method is whenever applicants have a very specific business model. An example that is given is that if you have very low volumes but with very high amounts per transaction, then you could be allowed to use a different calculation method. And then also the specific method D, for formerly e-money institutions, so where you need to have at least 2% of the outstanding, the average outstanding e-money, remains obviously also applicable for PIs in the future that will issue e-money, but then only for the e-money services part and not for the payment services that they will provide. And also the novelty that AISPs and PISPs do not longer have the obligation to get a professional indemnity insurance, because that turned out to be difficult in practice for some of them, but they can now hold 50K own funds. More importantly, maybe, is, and we touched upon that already as well, are the safeguarding requirements. So the full focus is on avoiding concentration risk, with a consequence that PIs are now or will be asked to no longer use the same safeguarding methods for all the customer funds. That doesn't necessarily mean that if, like the majority of institutions today, you safeguard with a bank account, you have to split out and also, for example, move a part of your funds and invest them in liquid assets. That's not the idea. If you are with safeguarding on bank accounts, you can remain, but you will have to split out over different banks. So obviously, taking into account the whole de-risking problems that the sector has seen and is still suffering from, this is clearly not good news. So, but it is to avoid concentration risk. One of the potential mitigation measures that are proposed is that as a safeguarding method, you could also move funds to a central bank. So no longer you would rely on commercial banks, but you could have the option to use central banks. So in Belgium, that would be the National Bank of Belgium, but it's very clearly that this is at the discretion of such banks. And so it's a directive, it's an option. So we'll have to see how this is transposed into local law. But clearly, if central banks were added as a safeguarding possibility, this would be a huge relief. And then I will quickly go over that. There is a series of new definitions and clarifications that we find in the text of PSD3. Some examples include triangular passporting. So for those who are not familiar with this concept, it's basically the situation where you have an institution, a regulated institution in, let's say, Belgium, and you have an agent in Luxembourg, but through that agent, you would like to service customers in a third country, let's say Germany or the Netherlands, for example. So this whole concept of triangular passporting was not explicitly mentioned under PSD2. So it was not clear whether it was allowed and under which conditions. Now, most regulators, they accepted the principle, but it was not always clear to what country you should passport. So now this has been clarified. So triangular passporting is allowed, and the passporting should be done also to the country where the services are provided, so where the users are in the end. Another clarification is around buy now, pay later. Quite logically, it is confirmed that this is not a payment service, but a credit service. Payment accounts has now a further clarified definition, where it is clear that this account should be used for sending and receiving funds to third parties, also to block out certain unclarities like saving accounts that are now clearly out of scope. We have a European definition for e-money distributor that we already had on a Belgian level, but now we have the same one on a European level. So it's basically an entity that distributes and redeems e-money, quite logically. And as a last example, we have the so-called digital pass-through wallets. It's a mouthful, but basically they refer to Apple Pay and Google Pay. So where you tokenize existing payment instruments. This is explicitly labeled as not being a payment instrument, but a technical service. So that's also a more, I would say, novelty clarification in the text. Now, leaving behind the PSD3 and moving forward to PSR, two things that I've touched upon in the introduction that were key as an objective to the European legislator is, on the one hand, the access to payment systems, which is fully new. So the PSR proposes a change to the Settlement Finality Directive to add non-bank PSPs to the list of eligible direct participants to payment systems like Target2, for example. So today, if you're an EMI or a PI, so what we call a non-bank PSP, you are to rely on banks to get access to payment systems. So you can only be an indirect participant that connects to a direct participant, which is a bank, which are the only ones that were allowed to have a direct participation. And so in practice, you relied on a competitor, on a competing PSP to get access to payment systems. Now, this is an important, I would say, an important change. Now, it doesn't mean that you have a guaranteed access. Of course, it only means that you can apply and that you should abide by the rules and that a risk assessment will be carried out. But it is clearly stated that payment systems can only reject applications from non-bank PSPs if clearly they are unable to respect the rules of the system or they pose an unacceptable high level of risk. And again, those are debatable concepts. And then second, the access to payment accounts. So there already was one, but we all know it was very light in PSD2. So now this has been reinforced. So there is almost an obligation for banks to grant payment accounts to PIs in the future, but there are still grounds of refusal, what they call the serious grounds of refusal. And you see the list on the slide. It's quite long. It could be AML, breach of contract, insufficient information provided by the institution, an excessive risk profile, and so on. So question is, how will this work in practice? An appeal right will be available if there is a refusal, but most questions are around, okay, what is the maneuver, the margin of maneuver that banks will still have? And there again, we just have the principles here in the draft level 1 text. We'll have to wait for EBA to issue its RTS on refusals and basically what motivations can be used for refusals and which cannot. So the impact of this remains to be seen. Joan, you're on mute. Yeah.
Not anymore. Other changes. So PSR is the rules of conduct. So that's where we have the provision about open banking, and we know that normally the issues of open banking under PSD2 should be tackled with those texts. Honestly, to our understanding and looking at the test, we don't think it will be totally the case, but we might lack some technical knowledge, because one of the main changes is that, so first of all, ASPSP, so basically normally the banks or the payments service provider that hold the accounts, should now all have a dedicated interface. There's no room for them to choose between dedicated interface or user interface, contrary to the PSD2. I don't think it's such a huge change, but still it will be like that. And that dedicated interface will have to follow some kind of standards. And that's where probably we will need your feedback on that, because what the PSR says is that normally they should, so ASPSPs should ensure that their dedicated interface use standards of communication that are issued either by the ISO or by the CEN. We don't know whether this is sufficient in itself to solve all the issues that TPPs have with the banks. And if you have an idea about that, let's discuss it later. So for the rest, it will remain the same kind of obligation, being that there must be technical documentation, that if there's any change, the change must be warned in advance and so on. But the only standardization, at least, will be on those standards of communication. Another change for the ASPSPs is that there will not be any obligation anymore to have a fallback mechanism, which was very costly for them. But still, if there's a problem with the dedicated interface, then the TPP will be allowed under certain circumstances or by authorization, specific authorization by the competent authority to use the user interface. One really new feature in this open banking, at least based on the text now, is that the ASPSPs will be required to provide a consent dashboard to the user, so the account holder, where the account holder, after having granted permission to access the account to the TPP through the TPP, so the first authorization will remain the same, the dashboard can then be used to withdraw the authorization, also have information on the kind of accounts that are accessed and so on, but also re-grant it. That's kind of strange, but that will be on the ASPSPs. So voilà, that's the main or the key element in open banking that we have identified based on the text now. We wanted to touch upon, but just to briefly warn you that for the moment in the text of PSR, there are many provisions regarding penalties, enforcement powers, and so on. We won't go into details because one, they are very detailed, and secondly, what we hear in the sector is that they will be probably changed at least 3 times before there's something fixed. But we just wanted to draw your attention on that. There's one feature probably that still needs a little bit of comment, but I will give you the word, Philippe, on that one.
Yeah, it's the last point on the slide, and we want to mention it because it's the NBB itself that is very keen on this. It's that EBA will be granted so-called product intervention powers to basically prohibit and restrict, temporarily or not, services which are deemed harmful to customers or the market itself. So today, only national competent authorities for their jurisdiction had the power to prohibit certain services, and only after they were on the market. Now the EBA will have on a European level intervention powers, which are even ex ante, so before the products enter the market. It's not entirely clear how they will, be able to anticipate the harmful character of certain products and services, but this is clearly upon the request of national competent authorities that this has been introduced. Then moving forward with some more customer protection measures on transparency for so-called one-leg-out transactions. So where one of the PSPs is outside the union, there are transparency obligations now, twofold, towards users, first of all, in relation to the moments when funds will be received by the PSP of the payee. So basically, users should be informed on the estimated time of arrival on their funds with the PSP of the payee whenever this PSP is located outside the EU, and also transparency obligations on the charges which are requested from users whenever there is a currency conversion taking place for international transactions. So today we see that there are no clear rules around this whenever it's an international transaction, and so users are facing sometimes a lot of surprises around these charges, and so now there is a transparency obligation in the text.
Yes, and then and we are almost at the end of the key change, so please follow us until the end, almost there. So other interesting, or at least change that could impact PIs and EMIs and PSPs in general are relating to anti-fraud. So 2 things worth noting. The first one is that according to the new text, there's a new responsibility that is put on the PSPs in case and there's a fraud that leads to an unauthorized payment transaction, and that fraud comes from a third party impersonating an agent or an employee of the PSP, which are probably the most common types of frauds in which people accept to send money in very strange bank accounts. So this is something that should be followed by PSP, because it means that it's a financial risk, and that they will have to take additional measures to try and really prevent those kind of frauds. I'm sure they already try, but still, and we don't know really how this can be prevented. So obviously that liability will be excluded in case the user, so the client, either was himself part of the fraud or acted with gross negligence. The second one might have an important operational and technical impact on PSPs. It's the introduction of the obligation for the PSP, both of the payer and the payee, to allow the payer, whenever they do a credit transfer, to check the consistency between the unique identifier, so in Belgium, the IBAN, and the name of the payee. So basically, I put the bank account and then I put Mickey Mouse, for instance. Normally, the idea would be that with the entire system, I will receive a warning saying, please be careful, because the IBAN doesn't match the name of the account holder that you have put in the system. How will it be implemented? There are obligations on the payee PSP and the PSP of the payer. The PSP of the payee will have to answer any request for verification by the PSP of the payer. So for those, it's kind of easy, but they will have to exchange information. And for the PSP of the payer, they will have to implement a system or a process in their user interface that will provide that information. First, make the check, and then provide the answer, which is there a discrepancy or not, with, if I understand correctly, also indication of the degree of inconsistency. If you have 2 R where there's normally 1, probably it's just a simple mistake. There's no risk of fraud. But if it's a totally different name, then there might be an issue. The payment service user receiving that information will still be able to override that and decide to still send the funds, but at his own responsibility. And maybe just worth noting that this system is also provided for in the draft instant payment regulation. So that's but the texts are not exactly the same. So it will be interesting to see how these two texts will cohabit, because the obligation and the kind of obligation for the moment are not totally aligned, which would be a nightmare for PSPs. Going to the strong customer authentication, I think that to try to make a long story short, just saying that there is no revolution there either. The only thing is that there's an obligation to improve accessibility to strong customer authentication to non-digital clients, because we know that most of the systems of SCA for the moment are digital. But we still have people who don't have a smartphone, don't have internet, and so on, and are disabled users. There's small precisions, and I will not go into the details of those, but probably one thing important for TPPs, and more particularly for people offering account information service, is that for those, the strong customer authentication will be changed a little bit, and normally for the best. At least for their services, because under the new text, the obligation to use strong customer authentication will only apply on the first time an account information service provider access an account. Once this is done, normally, and except in case of suspicion of fraud, the ASPSP should not require any SCA anymore, but then the account information service provider itself should implement a SCA into its own environment and apply it every 6 months. So voilà, that's probably one of the biggest novelty in my view. There are other things that are worth noting, but I see the time passing. So I'm going to jump to the next slide. This slide is just to warn you that we have been saying that this draft is a first draft. It will be subject to change, but it's only a part of the story, because as under PSD2, we will have other texts that will have to be issued, this time either proposed or totally drafted by the EBA. And so it means that there will be many level 2 texts that will either put more details in obligation or clarifications and so on that still need to be drafted. And those are, there are already many guidelines and RTS existing under PSD2, but there will be more under PSD3 and PSR. So a lot of pages and regulations to apply for PI and EMIs. And then finally, our conclusion or a few reflections from us. The first one is because we know that fintechs generally have cross-border services, and they are confronted every day to the difficulties that accompany those, which is that they have different regulation from one country to the other. And one of the objectives of the new text is to provide more harmonization, to try and avoid that obstacle. We fear, unfortunately, that this will not be totally solved by the new text, and even with the PSR, which is a regulation, so should apply everywhere in the same way. Why? Because there are still many sub-options that the member state can decide on. Also, some important notions are still left to the local law, so like, for instance, liability. So it means that there will remain discrepancies and different practices and so on from one member state to the other. We don't feel that it will be really changing. And then going to the last question, are the PSD3 and PSR a revolution or only an evolution? I think you will have understood from what we've said that there is no revolution, and probably the biggest revolution is not in those texts, but in another proposal that has been issued on the same date regarding the financial data access that tries and organizes the sharing of data across financial institutions, and that's the data around many different financial services. So that one should also be closely followed up, and it's very interesting for the sector. But for the rest, here, PSD3 and PSR, no revolution, but please follow it, because still there will be potentially very important operational or technical impact. We've talked about the reauthorization process. We've talked about this IBAN verification, but also the transparency rules. You will have to change things. Open banking, depending on the level 2 text, there might also be some IT developments to be foreseen. So interesting times, but voilà. That's the end of our presentation. We are available for questions.
Thank you, Joan. Thank you, Philippe. I'll just close the presentation. I see that you have 3 people with questions. Jean-Gabriel first. The webinar has touched to its end. If you have more time, please stay. And the hard stop of the speakers will be, I suppose, our hard stop as well. So Jean-Gabriel, if I can ask you to maybe come as come live and unmute yourself and ask your question.
Hi, so it's Andrew from Xhand here.
Yeah.
Hey, I actually had a question about, there was the final point of one of the slides that Philippe presented, I think, was the EBA being able to block some kind of initiatives based on some kind of internal rules they'll set up, or some kind of things that they fit that would be damaging towards the consumers. And I was kind of wondering if we had any idea what would fall under that, because there have been some initiatives like the European Payment Initiative that is really stepped outside of the PSD2 scope deliberately. So I don't know if this could be one of the things they're targeting, or if it's something else completely.
Yeah, I think a very, very good question, Andrew. Quite frankly, I'm as clueless as you are. What I've read, however, but this is not in the European text, and I also don't see how this could have an impact, is that, and it's a bit the same story with the digital euro. It's more Europe weaponing itself against, I would say, initiatives coming from the US and Asia, that, somehow they are scared that one day the European market would be flooded as well by WeChat applications with pay-in possibilities or Apple products, etc. Then again, I don't see how exactly, because clearly they would have to get authorization as well. But potentially they're anticipating that, you know, providers, tech providers like Apple, like Google, that are already very present in Europe, that all of a sudden they would roll out some payment feature that is not authorized, and that they can, you know, anticipate and block it immediately on a European level. That's one possibility I've read. There are potentially others, and they haven't officially commented on this.
Okay, thank you so much.
Sorry, I was muted. Jeremy, I see that you also have a question.
It's more of an observation. Things like the winding down plan are now mandatory in the UK, and in fact the NBP says they're demanding it, and it's already in the guidelines and regulations, although it's not. Can we take that sort of as it's definitely going to go through? Things which are already being required in the UK are going to be required here?
Hard to tell, honestly. I think that the actual, you know, content of the winding down plan can now be found in 3-4 lines in the level 1 text. So it's basically the principle that is being introduced, and I think we'll have to wait for either further clarification in new versions of this text, either see what the EBA comes up with in the level 2. One indication that we have, however, is for credit institutions, so certain types of credit institutions, so basically banks, whenever they have a digital business model, and that's an anticipation of a lot of digital banks, neobanks, they already have this obligation as a requirement for their license application. So potentially that could be a good source to go look and see what they're asking from these institutions concretely.
Thanks.
Thank you. Can I ask everyone just to quickly appear so we can take like a nice picture for social media, say hi to the camera. Anyone still in front of this computer, if you can activate your camera so that we can say a big hi. Yay, lots of people are still active and listening, that's good. Okay, anyone else? Claudia, I see Utkarsh as well. Stan, Carl, Morgan, Thierry. Yes, hi everyone. Okay, say hi to the camera. Thumbs up. Thank you so much. I'll leave you to keep going with the questions. I see Alex Van Ommen has a question. Francois was asking, he had to leave as well. Wow, Thierry, wow. And also I see that, so Francois had to leave, but he was asking if the Q&A would be summarized. So I just repeat what I said at the beginning. There will be the recording of this event is going to be put online on the website, on the members page, and so you can always go through the question and answer if you need to leave. And also, as a member of FinTech Belgium, please take advantage of these absolutely brilliant partners' expertise that we have. Joan and Philippe are mentors for you, so you can always book a 1 hour free advice with them through sending an email to Joanna. So now we can go back to the question. I see Alex Omen has one, and also Frederic Menens afterwards. Alex, are you still there?
Yes, I am. Sorry for the lack of camera. I have just a very brief question about an item I saw on slide 9 regarding the authorization applications for PIs, where PIs are supposed to inform of other jurisdictions where the PI is in the process of submitting license applications. Are there limits on the jurisdictions? Is this like specifically to say, okay, yeah, we're applying in France, but also we're applying in Canada, or is it is there limits, or is it just like wherever an application is happening?
No, I feel it's really focusing on forum shopping within the European Union. So it's typically whenever you would think of setting up your business and you hesitate between France, Germany, Netherlands, and Belgium, for example. And I mean, I wouldn't advise it, but imagine that you start them up all 4 of them simultaneously, that would be information to be shared. So basically, it's around avoiding forum shopping, and it's a question that is already raised by regulators today if you go see them for a new license application. They just want to avoid doing, useless work, basically. If they feel that one of the jurisdictions you're applying in is a better fit, because either, you have a lot of people coming from that country or your business model is oriented towards that country, then they might just, use that as pushing you out of their jurisdiction and into the what they would call the right jurisdiction, basically.
Thank you.
Pleasure.
Thank you. I see then, as I said, Frédéric Menens. I don't know if the person is still there. No, but I see, do you believe the proposed anti-fraud measures, hence matching services, will have a meaningful impact?
So the IBAN verification, honestly, yes, it could avoid some fraud cases, but I think that the real, if we look at the justification in the instant payment draft regulation, it's more about giving more confidence to the user than probably really combating the fraud. So no, that's for sure that there are frauds that normally when you see that you think that you are sending money to a provider of services, and then you have this very strange name appearing, or we say it's totally not the same, that might help. But again, it's always the same as for all frauds. Normally people should be educated by the financial institutions and so on, and even with a discrepancy warning, some will continue doing the payment. So.
Thank you, Joan. I see also that, Sasha, we've missed your question. I don't know if it's still relevant or if it has been answered already.
About the difference in the IBAN verification, that's that, yes. So the question is, what are the difference between the two texts? So I will say, hopefully, normally, nothing in terms of principles, but the texts are not aligned. And the instant payment regulation goes way into more details in terms of what kind of information must be provided, how it must be provided, when, and so on, while the PSR, for the moment, seems a little bit broader. So for me, it's okay as long as one is still a little bit more vague and the other more detailed, and it's agreed between everyone and all regulators that then let's follow the more detailed one. But what we really should avoid is to have two different provisions. And it looks like they didn't want to align, at least for the moment. That's the only reason why we raised the topic.
Okay, thank you very much.
Has anyone else any question for Joan or Philippe? No one? If you want to take if you want to stay in the room, then please just be my guest. If you want to ask each other questions or whatever, network. I know it's a bit of a weird one in a digital format, but be my guest. I have to jump on another call. I'm afraid I'll stop the recording